Hello everyone, hope you're all doing good and welcome back to my YouTube channel. So in this video we're going to learn how to properly use operation of time frames in order to find best possible entry from lower time frame all the way up to higher time frame. Let's get straight into the chart. Alright, so quick disclaimer that this video is only for informational purposes and it doesn't constitute any financial advice. Please consult professional advisor before making any financial decision. Remember, trading involves significant risks. Alright, let's get straight into the chart. So how we're going to use operation of time frames in order to find best possible entries on lower time frame. First things first, you need to clearly identify your direction. And like I mentioned on the previous video, if you didn't watch, go ahead and watch my previous videos. There are only two time frames which we use for directional purposes. So that's H4 and H1. I'm currently at the H4. Alright. So as you can see, let's actually break it down chart starting from this point right here. As you can see, we had last resistance right here, correct? Which is sell engulfing. Why is that sell engulfing? Because three following bearish candles literally closed below the wick of the last bullish candle. Pay attention right here. You had last bullish candle, you've got first bearish candle, you've got second bearish candle, and you've got third bearish candle literally closed below the wick of the last bullish candle right here, my friend. All right, that area will be your resistance. And now pay attention, you need to ask yourself, what type of structure is that? Now price created external high. Why is that? Because from this high, you've actually got breakout of this previous low. And that low was your external low. Why is that external low? Simply because, pay attention, if you just zoom in, starting from high and open of the last bearish candle, always act as a resistance. Pay attention right here. Price couldn't close above the high of the last bearish candle. This candle, correct? However, following candle literally broke your previous bearish candle, went all the way up, and created following higher high. So what's the definition of external low? Remember, the definition of external low is the low which goes breakout for the previous high. Now look at that. Follow up with me. External low is the low which goes breakout for the previous high and created following higher high. So that low will turn to external low, which is our key point, right? So the breakout of your external low actually is the main indication that your direction has shifted from bullish back to bearish, all right? So price pulled back all the way up to your resistance, right? How we're gonna mark resistance? Resistance should be marked from the low of the bullish candle all the way up to this high of the bearish candle. And pay attention right here, my friend. You've got this one as a fresh resistance. Price literally tapped to this resistance. Now, all you have to do is just to wait confirmation on lower time frame. And how we're gonna get into that confirmation. So if you have a look, M1 time frame, look at that. Price literally tapped to this resistance on H4 and price giving you first external low breakout right here. Do you remember what's the definition of external low? External low is the low which goes breakout for the previous high. You've got this one as a high, bear in your mind, you've got this one as a high, which goes breakout for the previous high and created following higher high. So that low will turn to external low, correct? Now you've got clear breakout of your external low. Now price created following external high. Why is that external high? Simply because this is the only high which goes the breakout for the previous external low, correct? What's the definition of external high? External high is the high which goes significant breakout for the previous lower low. So that means if you got this type of structure, correct? So let's just draw one more. If you got this type of structure right here, this one is external low. So what's the definition of external high? External high is the high which goes significant breakout for the previous lower low or external low and created following lower low. All right. So that must be lowest low or that must be significant low, which is external low. So what is significant low? Significant low, we call it as an external low. All right. So you need to be really advanced in terms of structures. There are internal and external structures. Don't confuse yourself with internal structures, with internal breakout, thinking this is external low. You get a lot of stop loss if you don't know how to properly mark your structures. All right. Now let's get into the chart. So we've got clear breakout of our external low. That's the first indication that your M1 direction has actually shifted from bullish back to bearish. All right. Now pay attention. A lot of traders, they will anticipate that trade must be taken based on this high. Why is that? Because they think we've got liquidity right here, right? We've got another liquidity right here, right? And we've got inefficiency and whatever and everything, right? I personally don't use any type of liquidity, bear in your mind. When you're trading support and resistance, specifically current market price, which is CMP, right? You don't need liquidity. All you need is just a market flow. All you need is just the external and internal structures and current market price. That's it. That's it. All right. Now I've got clear breakout of my external low. All I have to do is just shift to 5 minutes and confirm fresh sell engulfing. Correct. Now look at that. I've got fresh sell engulfing literally right here. And I've got external high exactly right here as well. Now the question is, why this high is external? Simply because from this high, you've got another breakout exactly right here. And guess what, my friend? That low was your last external low. That low was your last external low. Why is that? What's the definition of external low? Let's remind me. So external low is the low which caused breakout for the previous high and created following higher high. Correct? So that one will turn to external low. Now you've got breakout of your external low. What's the definition of external high? External high is the high which caused significant breakout for the previous low and created following lower low. Right? So now price pulling back to this external high. Now the question is, look at that. Why price didn't pull back to your M1 external high? Because if I go back to M1, I've literally had this resistance, right? However, price reacting from random rectangle, price didn't even go all the way up to your inefficiency or whatever you call, right? So price never pulled back to this area. But where this rectangle coming from? Look at that. Look at the second rectangle. Let me actually change the color to the blue. Why price reacting from this one? Simply because price created fresh resistance on higher time frame, my friend. So that area will be our point of interest, right? So higher time frame, fresh sell engulfing will be actually the main roadblock to your external high on M1 time frame. Why is that? Because higher time frame always stronger compared to the lower time frame. But there are some times when you see M1 external low and price didn't pull back to your higher time frame point of interest. Why is that? Simply because M1 has own structure as well. So you need to be master of that structures. It's hard to explain, but you get there if you practice a lot, right? So now look at that. Price reacting from this sell engulfing and price creating another confirmation. So the entry will be based on this sell engulfing, stop loss right above this high, and first take profit. Look at that. First take profit will be your internal low, which is right here. Entire structure, look at that. Entire structure right here is purely internal. Why is that? Because price couldn't close above the high. Price didn't create any higher high yet. So that means that entire consolidation is purely internal structure. And we don't trade based on the internal structure. That's why I told you, you're going to have to master external and internal structures always, right? Now, first TP is right here. Look at that. Price going all the way down. Price caused another lower low. Now the question is, we've got another external high right here, my friend. Why is that? Because this is the only high which caused significant breakout for the lowest low point. So that high will act always as an external high, correct? Now, once I got another lower low, all I have to do is just shift to higher time frame, which is M15. I'm going step by step, by the way. Let me actually delete everything from this point. When I checked M15, what I've seen is this external low breakout, correct? This is the only low which caused this high as high. You've got breakout, so price created M15 external high as well. So now you've got 3 time frames aligned to the bearish direction, starting from M1 all the way up to M5, then M15, right? Now look at that. You've got breakout of your previous lowest low as well. Price literally closed below this low. Now look at that. Can you see this bearish candle? You had last OHLC type support right here, starting from open all the way down till this low, and you've got breakout, right? So when you got clear breakout, you should shift to H1 time frame. And when you shift to H1 time frame, you realize you've got external low of H1, right? So that reaction, look at that, where that reaction coming from. Why price pulling back? Why price pulling back to this M5 external high and going all the way down? The answer is higher time frame external low, because if you have a look H1, you've got clear support, which is external low right here. So that's why price on M15 broke this previous low and pulled back right here, correct? Because looking at the M15 chart, you've got external high exactly right here, my friend. Now the question is, why price didn't pull back to your external high? Why price didn't pull back to your external high? The answer is, like I mentioned earlier, operation of time frames. Because if you have a look M5, you've got external high right here. So that external high will be your main roadblock to your higher time frame point of interest. All right. So you've got clear reaction from this external high of M5 time frame, price giving you another breakout exactly right here, my friend. Look at that. Price pulling back to this external high, right? So from this external high, you've got another reaction and price actually making following lower low right here. So where would be the entry? Once you got clear confirmation from this external high, look at that. Once you got clear confirmation, price reacted from this external high, caused what? Caused another lower low. So that high will be your external high. That will be continuation trade. Sell position right here. Take profit will be below the low of H1 time frame, which is right here, right? So now look at that. You've got clear breakout of your H1. What does it mean? That means your entire higher time frame direction shifted from bullish back to bearish. Now H1 bearish, all right? We came all the way up to from M1, M5, M15. Now we are on the H1. Now, the only question is, which high caused the breakout? Let me actually delete everything from this point. I've got lost external low right here. Now I've got two options. Which high caused the breakout? A lot of traders will mark this one as a high which caused the breakout. And this is absolutely wrong. Why is that? Simply because if you move to line chart, you will clearly see from this high, price created this low. And this low created this high, and this high created breakout, right? That's why you need to clearly identify the structures. So looking at the chart, once I got the clear breakout of my external low, the only high which actually caused this breakout will be this high. And that high will be my external point, all right? If you want to learn how to properly mark external structure, internal structure, if you need full guidance with current market price, how to properly use operation of time frames, check out our official website where you will join into private community, where you will trade with professional traders, where you will have Zoom calls twice a week, Monday and Friday, right? I'll see you inside. So coming back to the chart, we've got external low breakout exactly right here, right? So this high will turn to external high. If I want to take direct trade, I need to measure the zone. So the zone is over 100 pips. That means I can't take this zone. I can't take this trade, right? So what I'm going to do, I'm going to wait until price pull back to this area. Then I'm going to shift to lower time frame, right? And I will take a trade based on this sell engulfing right here. So that will be only point of interest where I would possibly take. Why is that? Because if I got late, I wouldn't jump into the, let's say, any random trade, because my sell engulfing must be confirmed with following breakout. All right. Looking at the M1 time frame, look at that. That sell engulfing been confirmed based on this breakout right here. You've got this high, which goes this low. So that means I can take a sell based on this sell engulfing. Why is that? Because I've got clear confirmation on lower time frame, right? So if I took this trade, my target will be this low, right? If my target hit, if I want to leave the rest of the trade, I'm going to leave the probably 30% following up to this low right here. And that will be my full TP area. And pay attention, price went all the way down to this take profit. So make sure you front test that strategy and don't forget to subscribe.